Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Friday the 16th of the 4th 2021. Time is just coming up to 0500 GMT, Asian session coming to a close, European session firing up, our lunchtime North American session. Right, yesterday, Thursday the 15th, we had a positive opposed driver in the yen at plus 63, front and back door flows, going mainly into the euro at minus 62, into the dollar at minus 10, and the pound was the positive rock at plus 9. Activity plus or minus 17. Notice it was very close as to who was driving, either the euro negatively or the yen positively. Intra-week then, this is the most relevant because it's Friday. This is from Monday the 12th, open to about 15 minutes ago. So we've got a negative opposed driver in the dollar at minus 196, front and back door flows, mainly going into the yen at plus 173, into the dollar at plus 48, and the pound was the negative rock at minus 25. Activity plus or minus 221. Finally, intraday then, this is the Asian session to about 15 minutes ago. We've got a positive unopposed driver in the dollar, plus 58, so no backdoor flows. The opposing negative flows mainly coming out of the pound, minus 49, out of the euro, minus 7, and the yen was the negative rock at minus 2, plus or minus 58. What's been knocking it about then? Well, quite a lot, as you can imagine. But anyway, China then, we had the GDP for Q1. Came in at plus 18.3%, massive figure due to the low base, etc. But anyway, that was relatively soft in some ways. So, it's all sort of feeding into our macro approach. Retail sales were very positive though. So the pundits and the analysts are sort of raving about how China's switching from an export-led economy to a consumption economy. We shall see. I doubt it. Anyway, today we've got Michigan consumer sentiment, and Turkey has thrown a spanner into the cryptocurrency world. It's banned payments for goods and services using crypto. So that's all good news, or not, as the case may be. Right. So let's have a look at the flows and what have you. Our trades have been under the cosh. We had to retrace on some of our scaling. We're about 60% scaled now compared to our max. The overall position is about minus 1500. We've had a swing of 4,500 against us, but we're fine. Anyway, right, let's carry on. Euro complex is strong, except against the dollar, the CAD, and the Swiss. The yen is weak, except against the pound, the AUD, and the NZD. The pound is weak, except against the AUD. The Swiss is strong across the board. The CAD is strong, except against the Swiss. The AUD is weak across the board. The NZD is weak, except against the pound and the AUD. And the dollar is strong, except against the CAD and the Swiss. So what have we got? We've got AUD weakness across the board, which is not very helpful for us. We've got Swiss strength across the board, and take your pick in the middle. Basically, our macro scenario has panned out exactly apart from for the New Zealand dollar. We suggested that you're going to get a weak dollar, a rise in commodities, a pump up in Q2 on China, and it's all starting, the data cycles are all starting to line up. The only thing that hasn't lined up is that the powers to be are still pumping the New Zealand dollar. Well, that will change at some stage. Right, so let's have a look at what's going on in the other asset classes. So we've got dollar index, so US dollar index. Well, the US dollar index, basically it broke, and it's now come back under its resistance. Gold has come back to 0.33 from the floor, so it's off the floor reasonably well. Oil has come up to 0.3 from the high. Wall Street broke, it's up here somewhere. S&P had this double top, and it's broken even, and it's there. The tech basically took a long time to get through. Has got through and slightly come off there. We've got US 10-year on the bond. The US 10-year excuse me, is 0.4 from the floor, and the bond is again 0.4 from the floor. So we've got this, and this is the price. So the yields have come off. So we've got this complete retracement in yields. The US was by far the stronger yield of the two. Then they started closing up, and now that gap has completely closed. So effect on the euro, dollar, etc. Right, copper. We said yesterday that we thought copper was due for a good bounce, and we got a good bounce. It came back to the second pump, went back to base camp. It's messed about. It's now at the third pump. So it's trying. US steel sold off at the double top, broke, and it's now about 0.4 from the high. So it's come off a fair bit, but it's thinking about going back up. Right. So let's just finish off then. So basically, trading at the moment for us has been like a sort of a war of attrition. We've sort of taken one step forward and two steps back all the time, but we're managing what we're doing. So we've got we're short US. We're short the dollar USD against the euro, the pound, and the AUD, and we're short the NZD against the euro, the pound, the CAD, and the AUD. Now the flows aren't very friendly for doing this at the moment, but everything else points to you've got a massive pump in the AUD data cycle. You've got CAD pump as well. Likewise with the AUD there. You've got dollar weakness. You've got China starting to come online. You've got the whole scenario panning out. You've got commodities starting to come up, and the only thing that's wrecking it is basically they're carrying on pumping this NZD off a massive fall in its data cycle and all the rest of it, and this will change shortly. We're just going to hang in there. Once it starts changing, everybody will be running from the exits on the NZD, and the only places that they'll do is they'll want to catch up. These trades are about 0.85 on the scale of 9 to 0. So in terms of how stretched they are. So it's just a case of waiting it out, keeping the account happy, and waiting for the payday. So I hope that was useful. Tomorrow we've got the daily briefing, the weekly briefing, sorry, for the flows and the data cycle. Try and catch that. If not, see you Monday for the daily briefing. Thank you for watching. Goodbye.